Let's look at ZRX. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we have the cryptos here, and this is the pair. So it's 0x/US dollar, ZRX/USD is the ticker. So here is the website. So the liquidity endpoint for DeFi, decentralized finance on the Ethereum, Polygon, and a bunch of others. So it is. So the API is a professional-grade liquidity aggregator, enabling the future of DeFi applications. So focus on your products. Let 0x find the best prices. So our smart orders routing splits up your transaction across decentralized exchange networks to be filled with the lowest slippage possible. That is definitively something that is very much in demand. So all the popular DEX networks, Uniswap, Oasis, Banker, plus exclusive 0x liquidity. So professional market makers, 0x open order book, private liquidity pools. So almost 100% uptime, 2% revert rate, 1.5 seconds response time. Definitively, this is something that is in demand. So let's look at this pair. So the interesting thing I found is that time cycles for this one has been reliable for quite some time. So we do actually start here with daily data points, just here to get the time cycles. So rise, decline, rise, decline, rise, decline, rise, decline, and look here also at the price vis-a-vis the time cycle. Rise, decline, rise, decline, rise, decline. So you could have traded it in a very surgically with these time cycles, because they have really been reliable. If we look a bit here at the percentage moves, like from this low here to this high, that was approaching 600%. This move here, as an example, was 61%. So definitively, these time cycles have been absolutely amazing as far as when to buy and when to sell goes. The bad news about the time cycle is that it does suggest a declining phase, which also comes at a time where we do have some elevated RSI. But let's actually go back here to the big picture. Weekly data points. You could argue that we do have some major time cycles here on the weekly data points, suggesting that we are part of a major rising phase, and that can to some extent offset the downward pressure from the small declining phase. So we have seen that major crash here from the highs, but we are now basically stuck between two super important moving averages. The green 50-week moving average has been a support in the past. It has now become a resistance. Then again, we do have support from the blue 100-week moving average. So really stuck here between support and the resistance. Here with the daily data points, we have been able to reclaim a bunch of important moving averages. The 50-day, the 20-day, especially the 50-day, getting above that one is it's a big deal, because it was pretty clear resistance, and but we do have the blue 100-day here on the horizon that is very likely to offer some resistance, given that it has been important in the past. But it's all about the context in which we do interact with that resistance level. So if we were to surge a bit now and then test it, then there's an increased probability of us getting rejected. But if we do have a bit of that declining phase, cool down a bit, and then have a new rising phase around the corner, during that rising phase it would be easier to get above the 100-day moving average. So that would be like a more strategic way to reclaim it, because it's important not to get like overly ambitious because we have already reclaimed some very key moving averages, so we sort of can celebrate a bit. We are emerging from a double bottom pattern. Yeah, so let's just draw that one in with the arrows. So boom and boom, a double bottom, which is one of the key ways in which key lows can be formed. What is even better with this double bottom is that we also had the double bottom on the RSI, with the second part of the double bottom being higher than the first, which is a very nice setup. Because when you look here at the actual price, we did actually close a bit lower than we did here. So to sum up my take, long term, I am bullish. Shorter term, I wouldn't be surprised to see, you know, that declining part of the time cycle play itself out, given that time cycles, the smaller time cycles especially, have been really reliable for this pair. So in the remaining time, let's quickly here look at Bitcoin. So here we have it. We did see a very important event in the form of this rally, because we were really getting into some dangerous territory here around the 30,000 level. So this was a very big deal. Very beneficial here for the bulls. So even though, yes, we have seen a bit of a pullback after that, the bulls have the opportunity now to really defend that level in a much more robust way than certainly was the situation here, because at this point on this day it really was starting to get dangerous, because we did here we did actually really were threatening that level, you know, the 30,000 level, and which also formed, you know, the neckline here for the head and shoulders pattern. So yeah, looking long term here for Bitcoin, I would lean speculatively bullish. We still have a head and shoulders pattern, but the bulls have at least increased the probability that we can see a more healthy development here for Bitcoin. So instead of having, you know, this happen again, which has happened many times in the past, this rally, it increased the probability that we could potentially form a bit of a floor here, maybe even a longer term rounding bottom at these levels, which would be really good if we formed something like this, and then we're able to like break out, because that would change, you know, the dynamic that we have seen in the past with these boom bust cycles, and that is what we need to really mature.